I'm going to start with a somewhat inside-out question. I've read a lot of stuff about this, and there are a lot of people, let me just label them the hysterics, who say that if the U.S. defaults on its debt even a little bit, even for a day, that, to use the Allstate commercial, mayhem will happen in all the markets the world over. Do we know that?
Yeah, well, thanks for having me on, Tyler. And I think what I would say is we don't know it for sure, but to some extent, I think that's where some of the fear comes from. It's fear of the unknown. We've had a lot of close brushes with default, right? 2011, I think, being one of the more recent and more serious examples, but it's never happened before. What I can say, though, is it's certainly understandable from where all the fear comes from. The U.S. Treasury security market is the biggest and deepest and most liquid bond market in the world. It's the oil and the lubricant that really keeps the financial system going and running. It's a major source of liquidity for financial institutions, pension funds, corporations. Obviously, money market funds run into the trillions and are a major source of cash for a lot of individuals, companies, state and local governments. And so you sort of start to step back and you ask yourself, if that did come to pieces, what would it mean for financial markets and the economy? I think it's really hard to make a case that it would be a good thing.
You know, it's interesting because I feel like for most of my adult career, we keep covering debt ceiling limits that come into play and the fact that Congress keeps having to come to the table and can you use it to extract a promise to cut spending, which is right now what a core group of Republicans in the House is trying to do. I'm just curious, what would happen if there were no longer a debt ceiling? What if we could just borrow whatever we need to borrow for that year? What happens?
Yeah, I think what would happen is these fights would go away. You know, when I think about what the debt limit is, it's just a legal limit on how much money the government can borrow. It doesn't have a whole lot to do with authorizing new spending. When I think about why the government spends what it does, whether it's Social Security or defense spending or Medicare or all the various things the federal government spend money on, that comes from previous laws, maybe passed recently, maybe as big as, as recent as the omnibus bill from December, or maybe passed decades and decades ago. But ultimately, that's what's authorizing this spending, and the debt limit is just putting a ceiling on how much borrowing can be done. Because the government needs to obligate those previous, yeah, go ahead.
Well, Mike, I'm just curious, are you as concerned with the national debt? I mean, if we're at $34 trillion, is that to you a real risk to our future as a nation?
Yeah, I think it's a risk. I think of it more as termites in the foundation than I do a wolf at the door. I don't think it's something that's going to cause a crisis today, but it's really hard to know exactly how much debt is too much debt when it comes to, GDP as a share of total debt. It's around 100% or so. That's the biggest it's been since World War II. And I do think that's a concern, but it's the kind of thing that just, we don't know when it will become a major problem. It may not be today. It might be down the road, but it definitely does concern me.
How concerned are you that there really may be this catastrophic moment that will come sometime between June and August of this year, by most forecasts, when the ability of the Treasury to do sort of kludgy fixes to this run out, and that the moment comes where a bond is defaulted upon? What will the ripple effects be, and what are the odds of that happening? It would seem to me that you may have a very strong political presence on the right wing of the Republican Party that wants concessions in return for raising the debt limit. But there may be many more moderate Republicans who really think that that would be a bad idea to go into default.
Mm-hmm. Yeah, so the way I think about this is I think the odds are elevated relative to some of these past fights, whether it was one the year ago or the one we had right before the pandemic in 2019. And I think the odds are elevated for a few reasons. One, the makeup of Congress right now looks a lot like the makeup back when we had more close brushes with default in the past, like 2011, like 2013. In terms of what it would look like, if we do get to that point where, I think the true default date is probably around early August or so. That's the thing. No one knows. I mean, even if the Treasury was able to prioritize payments on principal and on interest, someone is still going to get shortchanged somewhere, whether it's Social Security beneficiaries, Medicare benefits, military pay, other non-defense sectors. And we just don't know what that would look like. How would it be prioritized? How long could that last? And I think that's where a lot of that fear comes from. And when you have such small majorities in the House and in the Senate, and the two sides are so far apart, they can't even agree to negotiate at this point. it's certainly something that caused a lot of trouble for me, particularly when we're already talking about recessionary risk later this year, even beyond the debt ceiling.
Mike, thanks very much. Mike Pugliese with Wells Fargo.